We've got Michael Wilson joins us from the Global Business Update from London. Good morning, Michael.
Morning. We've got a bit of a rally on Wall Street last night, so that's actually helped the Asian markets this morning. Remember, China is closed because of the Golden Week holiday. The Nikkei up 2.75%. The various details of the markets will all be included in the MCSI's broadest index, up about 1.5%. The Reserve Bank of Australia didn't raise interest rates as much as people had expected, only by 0.25% or 25 basis points, depending on how you look at it. Anyway, so relatively healthy. Let's turn our attention to Indonesia. It's the best performing Asia Pacific market so far this year. The Jakarta Composite saw big falls in May and July. It's playing catch up now, and it's stayed above the 7,000 level for some time. Foreign investment in the country has driven the index higher. The downside about Indonesia is the huge export benefits it has from higher commodity prices. And of course, when those fall, its economy doesn't do as well. So that's still a source of uncertainty. But nevertheless, the market doing relatively quite well there. Let us turn our attention to the United States and a bit of a recap of what happened there. Stock futures are rising, a bit of a relief rally, really, as October begins. That's what we had yesterday. NASDAQ futures up about 0.5%, Dow up about 126 points. Monday, a bit of a slide. The Dow up yesterday at 765 points. The Nasdaq ending up at about 2.3%. Staying with the United States, and Rivian, which is one of the electrical vehicle manufacturers, it's on pace to meet 2020 goals. Production has grown 67% in the third quarter. It's a startup company in California, and it remains on track. It says to build 25,000 electric vehicles in 2022, and that's what it said in March, and it's still going there. Now, as far as the EU is concerned, Germany, it said, may have to slash its its exports of electricity to France and others to prevent a crash of the power grid. This is according to Amprion, which is the largest of Germany's four electricity generators. The leaders of those two countries, Emmanuel Macron and Schulz, are meeting in Germany tonight for dinner. There are fears that that Germany may use its financial muscle to outbid other parts of Europe when bidding for energy and gas particularly, and Germany will come under pressure to contribute towards the EU bailout fund on top of the 200 billion euros that it's giving its own economy in terms of help over it. So back to the UK and the political shambles, and the Chancellor, there he is, and also the Prime Minister on the defensive, really. We covered the business about the U-turn yesterday and so on. What else will happen? Well, it looks like the homework will be marked by the Office for Budget Responsibility before the Bank of England's meeting on November the 3rd. So, in other words, they won't have any excuses not to look at what's actually going on, look at the costing plans and decide how high to raise interest rates, which is that what they do. The pound back slightly yesterday, gilt yield down very, very slightly. The question is what other things will happen. Will benefits not be uprated as far as inflation is concerned? All these things appear to be up in the air. So the markets are sort of relatively quite liking this. But of course, what hasn't been repaired is the credibility of the government. And however much they're saying at the moment, as they've been saying all morning, really, that 45% tax level, which they said to cut, now they're not going to, only cost 2 billion and not a big part of their economic outlook. Well, that may be the case, but it's still a U-turn. And really, to come that quickly, you have to wonder what political leaders are actually doing, whether they listen to voters, whether they listen to themselves, whether they've got policies, whether they listen to the markets, and so on. So an enormous amount of work to do, I still think, as far as credibility is concerned. Finally, let's turn to oil, and it's likely the markets are looking at $100 a barrel fairly soon. OPEC Plus meeting on Wednesday in Vienna, first face-to-face meeting they've had for 2 years. the feeling is they won't be going and saying nothing, and what they might be saying is a production cut, which would push the oil price up to $100 a barrel, if not further. That's the global view this morning.
All right, two things, Michael. Yesterday, I heard Mr. Kwasi Kwarteng, the Chancellor of the Exchequer, at the Conservative Party conference in Birmingham yesterday, and I was more confused than ever before. He talked about growth, but he was short on details. He said he listened to the people's concerns about these plans, and finally he's backtracked on that 45p window on his plan. But the question remains, who will sort out the problems caused for the Bank of England and led the Bank of England having to buy up those bonds to be able to stabilize the pension market of 65 billion? Because we forget that this comes at a cost. Secondly, he talks about the energy freeze. But the question is, what role, what help will that do to businesses that are already struggling? Because when the numbers came out, they were high up there. So what's the final solution to the energy problem? He didn't say. And he made this long argument about going green and all of that, cutting taxes. It wasn't a solid argument. And you wonder that Mr. Kwasi Kwarteng has got a PhD, if my memory serves me right, in economic history. What is really going on?
Yeah, well, history is a fine thing to study, isn't it? Economic history as well. Fact of the matter is that today's politics is social media driven, and politicians are, having to cope with a 24-hour news cycle and all this kind of stuff, which I'm sure I don't need to tell you about. He talked a bit about growth, wasn't detail about that. What none of these people have been talking about. I don't care about growth. What we need to know about is productivity. That means growth plus no inflation or little inflation. We are not a productive nation. And I think that's something that needs to be addressed. So one of the television stations was asking me yesterday in this country about what I wanted to see out of what the politicians would be saying in Blackpool. I said it's not down to people like me to want something about this, but I feel as though what they need to say is something which attacks small businesses' concerns about planning, about regulation, about business taxes, because that's where the key of a country actually is. It's not about rich people and God bless them, but not getting tax cuts and so on. It's about how you make things easier to have a productive economy, not a growth thing, but a productive thing. How do we get some kind of productive work going on? And that's what we're not hearing a great deal of at the moment. I suspect that that's what they probably need to do. Anyway, as far as the Bank of England's concerned, no excuses now. They will get the homework of the government's fiscal plans actually marked by the Office for Budget Responsibility before they meet on November the 3rd, instead of this 23rd date that had been hanging, because that would have been crazy. Have they learnt anything? I don't know whether you listen. What do you do as a politician? Do you have certain kind of beliefs that you say you've got to be patient with these? It is going to be difficult for a while. It's the same with the energy things. I mean, you could be saying to me, yeah, of course, bills held at £2,500 a year, but mortgages, if you've got a mortgage, it may be costing you another £2,500 as a result. Never mind the markets coming back and the rest of it. So all rather, I think, all down to things done in haste rather than thinking about these things. And I feel as though it would have been wiser to hang off delivering what people are saying is a mini budget. They're very keen to say it wasn't a budget, where it effectively wasn't it?
Okay, Michael, quite a number of things in my head. The first one, what else can Kwasi Kwarteng and Liz Truss come up with as they seek to reform the supply side of the economy? And then truly, is the economy of the UK out of the woods? Because some people are saying, look, even the double U-turn that we witnessed yesterday means absolutely nothing, because we're dealing with a calamity. We're dealing with a fiasco. We're dealing with absolute catastrophe that will still have to be dealt with. So what else can they really come up with? And then you have the backbenchers, including Nadine Dorries, who used to support Liz Truss, now saying, look, there must be a call for an early election. And with the Labour Party leading 22%, 28% in the polls, will she survive? And then you have also Michael Gove, you have former Transport Secretary Grant Shapps. All of them, are raising placards more or less at that calamity conference in Birmingham. So would they survive? That's one question. And is the economy out of the woods? Even if the pound sterling has improved by 1%, and we're told by the analysts at the Institute for Fiscal Studies that the economy, the market is calming down. Okay, those questions, you know what the questions are. And then, of course, the other question, OPEC Plus meets tomorrow. Should we expect, as the analysts are saying, that output would be increased, or, supply cuts will be on the table in an attempt, again, by OPEC Plus to balance demand and supply? And what will be the implications, particularly for developing economies like ours in Africa, where we've even had issues meeting production quota?
Okay, OPEC first then. I've got no idea. All I can do is point to what the markets are actually saying. What they're saying is that when they meet in Vienna tomorrow, they'll be talking about cuts. They would like, and I think a lot of developing countries like yours, for example, which are also oil-producing companies, quite like the fact that oil is about $100 a barrel. It isn't at the moment. It may get to that. I think that's what we're going to see from Vienna tomorrow. We haven't seen consumer destruction yet as far as the oil price is concerned, because it simply hasn't run as rampantly as people thought it would, mainly held back by people being very nervous about global growth. I think that's really where we stand at the moment. So, I mean, it'll be interesting to see what OPEC does. I feel as though there will be a push from, and OPEC Plus, of course, includes Russia, and I think there'll be a push from countries like that to get the oil price up to where it was. We shall see. As far as the economy and the woods are concerned, which woods are we talking about? I thought everybody was in the woods right now. Not making excuses, just saying that everybody's finding it very, very difficult indeed. It's the usual kind of thing. Energy costs high, the era of cheap money being over, big changes taking place everywhere in the world. As far as the leadership of the Tories is concerned, Nadine Dorries said that. Yes, she did. She said it yesterday morning. She does tend to come out with these kind of things. Michael Gove, Grant Shapps, doing the circuit and so on, talking a lot to the news yesterday. News people like myself, although I wasn't there, but news people like used to be, following them around like a pack of dogs, really, trying to get some kind of quote about what they were going to do and where the party was actually going. I think what it all points to, I don't think that I could be completely wrong. Again, I'm not a political analyst, but I don't think, I would not go for a change in the Conservative Party right now. And I think if you were to ask Conservatives if they really wanted to go through another leadership battle, I suspect they would probably say no. The point is, and I thought it was quite neatly put by a Conservative MP yesterday, he said it's fine talking about the markets and the bigger picture and all the rest of it. I still have my constituents and I have to talk about these policies on the doorstep to them. And so the policies have to be relatively simple. And the kind of complications that, well, of course, the 45% tax cut, wasn't quite, it's not quite central to, that 2 billion is not quite central to our economic plans. I mean, if somebody came on the doorstep, I said, well, I'm not interested in that. What are you going to do about my mortgage? What are you going to do about my energy prices and so on? What indeed are you going to do about benefits? And where will the fiscal hole be left? Where will that be when you finish talking about your plans, which again could be changing right now? I mean, will we be talking about a different economic plan tomorrow? It's entirely likely. This is the kind of situation that we're in. But I think everybody's in the woods. I don't think that it's not coming out of the woods. It's a question of redefining it. And this is where the grown-ups step in. And at the moment, we don't see many of those around.
Well, thank you, Michael Wilson. We seem to have run out of time. Otherwise, I will have also brought up the issue in Turkey, where Recep Erdogan is saying that is the century of Turkey. And meanwhile, inflation is over 83%. The actual inflation, according to the Statistical Institute, may well be over 100%. But that's another subject for another day. Thank you.
All right. We'll move on to business on the continent. Rotus is here.
Indeed. Good morning, Rufai. Good morning, Doctor. Yeah, I'm doing well. Good morning to all our viewers. Yes. I mean, it's a new quarter, final quarter of the year. The Nigerian Stock Exchange so far seems to have, defied global equity volatility when you compare its performance to other stock markets around the world. I think it's done about 14% year to date. At one point it was about 17% year to date. But if we take a look at some metrics, there are some headwinds that it's going to be facing as far as competition from other securities. In fact, interestingly enough, it's up 14% year to date, but in this most recent quarter, third quarter of the year, it's had its first quarterly decline of 5.39%. And then you now look at MPR, the monetary policy rate that was increased to 15.5%. You've seen in the most recent Treasury bill auction, we saw increases across the board. 364-day bill, it went from about 9.5% to 12%. So you're getting competition from less risky assets like Treasury bills. And look at the 10-year bond. The last primary market auction, that stop rate was at 14.5%. So that's almost neck and neck with the stock exchange. So if you're looking at risky stocks, and then you're looking at bonds doing 14%, almost as much as the stocks, and then Treasury bills also climbing. These are backed by the full faith and credit of the Federal Republic of Nigeria. So knock on wood, there's no default risk. Well, not there's no default risk. There's always default risk, but the chances of Nigeria defaulting are, very slim. And then, of course, year-on-year inflation at 20.52%. So there's a number of headwinds that are facing the stock exchange, in addition to the fact that foreign investors haven't been able to, repatriate funds out, and so they've some would say some of the reasons why we're seeing the market doing so well is because I can't get my money out, so I'll just, spread it around and buy other equities. So that's what we're seeing there with as far as the stock market. But still, 14%, it's below inflation, but a decent return considering other factors. The aviation issues that we've been talking about. Someone has to profit off of a crisis, is that what we call it? The Jet A1, some particular downstream players looking at their half-year results, particularly for Total Energies, Ardova. We had the Ardova CEO just yesterday on the Global Business Report, and Eterna PLC, Corn Oil, and some others. They've actually gotten a boost from Jet A1, at least going from 200 to almost 200 naira a litre a year ago to almost 900 at this point. I think Total and MRS combined revenues are up about 72%. That's their downstream half-year revenues compared to the prior year in 2021. And so, they've, again, this is a deregulated market, if you remember. So someone had to look at this and say, well, with all that's been happening with the aviation sector, they're buying the fuel from somebody, and so those folks are making profits. And then you now bring in PMS, which is still subsidized, and you can try and think about how much those downstream players will be making if you took the cap off petrol and allowed the players to maximize their profits. So that's something that I think they'll be looking with keen interest if subsidies are taken out in July or June of next year. And then finally, similar story to what we're seeing here. Is it similar? Kenya universities, they're looking to triple their fees. They ended free education in 1991. I think 95, they established the HELB, which is the Higher Education Loan Board that they have a student loan scheme for universities over in Kenya. Fees have not increased since about 1992 or so. So the vice chancellors have petitioned the states and university board to increase fees from about 16,000 shillings to 48,000. They're saying they want it to be more reflective of current realities. So they've seen enrollments dropping. That has impacted their revenues, and so it's very interesting how Kenya and Nigeria mirror each other.
It's very interesting because you can just segue this into the education model in Nigeria, right? I think we dabbled around an education loan board in the 70s in this country. I don't know why we didn't follow through that but one thing is certain: for you to get quality education, you have to have quality investments.
Right.
The problem is the government might not and cannot be able to bring in all of that capital, but that doesn't exonerate them from doing what they ought to do and fixing this ASU strike and giving them all of that money. But after this ASU strike ends and the government gives ASU what they want, all right, then we should now think long term, how do we fund education?
Right.
Because everywhere in the world, there's always a buffer scheme for you to be able to fund education because it's very cost effective. I mean, it's very expensive. It's very costly. So are you going to use the endowment scheme? You're going to increase tuition fee, university autonomy, let them raise their money, all the likes. I'll give you empirical stats. Prior to the 20s, 30s, before the Second World War, university enrollment rate in America was one of the lowest in among developing nations. But what pushed university enrollment rate was when, after the war, American government set up something called the GI Bill to give American troops, people that fought in the war, obviously, loans and concessions to be able to go to university. And a lot of people benefited. I think people that haven't benefited from that GI scheme, we've got about 1 or 2 American presidents that further became American president that benefited from that scheme. So it's a holistic approach you have to use for education because it costs money. For you to get that quality education like Harvard and the likes, it costs money. Somebody has to pay for it. Government might not be able to pay for it. Then what models do you use? Do you use endowment? Do you use, what is this called, scholarship schemes? Do you use loan boards for students and the likes? Because there has to be, like electricity tariff, cost reflective.
Yep.
And that's the challenge we're having. And that's why we've been having strikes over the years again. And that's why they keep talking about revitalization fees and all of that. So there has to be a sustainable future model into it.
Yeah, fair enough.
Okay, Rotus, I see you like Kenya a lot.
I might move. I might do the African business update from Nairobi next time.
Don't be surprised if I start investigating your connection with Kenya. We have William Ruto,
yes,
who is the new president of Kenya, and he has been making some, very deliberate, aggressive moves, removing fuel subsidy, saying he will introduce wealth tax, and also now saying, look, he has to take a look at the funding of the university system and, how to make the university system in Kenya sustainable. And you're absolutely correct that some of these things resonate with us in Nigeria. After all, in the conversation about the university system in Nigeria and the university strike that has been on since February 14, 2022, part of the contributions to the debate has been, what can we do to take a second look at the funding paradigm of the university system in Nigeria, that in itself being part of the problem. There are persons who have said, look, those who want to send their children to public universities should be ready to pay appropriate fees.
Right.
There are persons who argue, on the contrary, that, under Chapter 2 of the Constitution, education is a right, and that Nigerians are entitled to subsidy even under education. But the thing we have seen is that system is not working.
Nope.
As of this morning, the Court of Appeal is going to hear the ASU appeal to the ruling by the Industrial Court of Justice Polycarp Harlan.
Yeah.
And this will be some of the issues, in the background. So how do you fund education in Nigeria? In Kenya now, they say they want to increase the fees from
16,000 to 48,000 shillings, yeah.
About 300%.
Yep.
That sounds like 300% increase in school fees. Okay, will he be able to do it? Will he be able to manage the cocktail of what President Buhari previously referred to as consequences? But the takeaway for us in Nigeria will be that, looking at other jurisdictions, maybe there are lessons we can learn.
Yeah.
What is it that works elsewhere? Must we get education free? Must everybody go to university?
To university, thank you.
I see some people who call themselves university graduates. I even see people who say they have PhDs. But they sound like whatever to me. And I wonder, what is this leveling up of everybody? This hegemonization of ignorance and incompetence, that we see around. But that's another matter. That may be my personal opinion. Even if I think, look, it's important for people to be educated. So that's that about that. Now you were talking about people moving to, fixed income security.
Yeah, okay, the stock exchange.
Yes, I saw a story by Nairametrics, maybe about a month ago or so. You know, Nairametrics, you know, their analysts were saying that, look, yes, in other parts of the world, people increase interest rates. Nigeria too, in May, increased interest rate. It increased it a second time. Okay, now we are at 15 point something percent for monetary policy rate. But whereas in some other jurisdictions, those things work. Things that work in other places don't work here. This same Nairametrics, they did an analysis of the securities market, the bond market. And they said, look, people are looking for fixed income, the 364 window. Because they think, yes, the yield may be low, but it is safer. Portfolio investors are running away from Nigeria. So whatever kind of optimism that some of the latest reports may have indicated, the truth of the matter is that the stock market in Nigeria is as volatile as the global market. As we have seen in the NASDAQ Composite Index, as we have seen in New York, as we have seen in Luxembourg, as we have seen in the London Stock Exchange. Okay? So if people are celebrating that, oh, people are looking at fixed securities, the thing to look at are the distortions.
Correct.
We still have issues with foreign exchange, scarcity of foreign exchange. We have problems with inflation rate, which is a double digit. We have serious problem with the fact that we introduce all these measures. These measures do not work. Those are the concerns in my view.
Valid concerns, Doctor.
Very valid.
Very, very valid.
Very valid.
Very valid. All right.
Thank you so much,
Thank you.
Rotus.
Thank you.
I see. So, knock on wood. Yeah, I heard that. Very American.